Let's quickly have a conversation about Form 1040X. I want to give you line-by-line instructions. Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Soda Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about Form 1040X line-by-line instructions. But before I get into the actual step-by-steps, please, I want to talk about some fundamentals. So if you are here only for the line-by-line instructions, you want to fast forward this video to about 6 to 7 minutes, okay? But it's important to talk about the definition. What is an amended return? Because when we speak about Form 1040X, we are speaking about an amended return, right? This is a form filed in order to make corrections to a tax return from a previous year. So an amended return can correct errors and claim a more advantageous tax status, such as a refund. For example, you might choose to file an amended return in instances of misreported earnings or tax credit. So that's the definition. What is the target audience? So in other words, who should file an amended return? All taxpayers are required to file their taxes annually for the previous tax year, right? Everybody understand that. Taxpayers may realize that they made a mistake in filling out their tax forms, or their circumstances may have changed after they have submitted or mailed a return that has been accepted by the government. So if you have mailed your return to the IRS and something has changed in your life, you got married or whatever, and or you misreported income, then you can actually file an amended tax return. Okay, this can even be filed after the tax filing deadlines for the tax year that we are talking about. For instance, if you have already, let's say for the year 2021, if you realize that you made a mistake on your tax return around May 2022, for example, you can still file an amended tax return, okay? And not all errors need amending by their form. Let me give you an example. A mathematical error will be spotted and corrected by the IRS when the initial tax return is sending for processing. When this happens, any refund owed will be adjusted and any extra tax liability due will be billed to you, the taxpayer. Okay, so that's fine. What about timing? A taxpayer must file an amended return if the taxpayer's filing status for the year has actually changed or was incorrectly entered. If the number of dependents claimed is inaccurate, tax credit and deductions were claimed incorrectly or were not claimed at all, the income reported for the tax year was incorrect, and deductibility of certain expenses changed as a result of legislation changes, right? This happens all the time. Or if you have tax relief due to a natural disaster changes that the taxpayer can benefit from. Okay, this is important. Or the taxpayer realizes that they owe more taxes than they actually paid. Let me talk to you now about the pros and cons before we actually get into the actual step-by-step. So there are pros and cons, okay? On the pros, you can correct errors on an amended tax return. That's the cool thing about it, right? You can actually claim a refund you were owed even if you didn't file for it. This is why we always advise folks on this show to always file a tax return. You never know. You never know. And you can actually correct for circumstances that changed since you originally filed. This is kind of cool too. This is what I was talking about earlier. You got married or you got a kid or whatever. And so you can actually file to take advantage of your positive situation now. So those are for the pros. What about the cons? Form 1040X cannot be filed electronically for all tax years. And processing an amended return can take 16 weeks or longer, depending on the IRS's backlog. So you got to really think about it. If you're expecting a refund, please be patient. because this could take months. All right. And there is a 3-year statute of limitations for collecting tax refunds. So this is something that's very important. And this harks back to what I said earlier. You always want to file your tax returns because you never know. I mean, so there is a 3-year statute of limitations. At least if you filed, you can actually take advantage of that. And one thing I also want to say here is that the IRS manually processes amended returns. Okay. So don't think about if you currently are with H&R Block or Tax Act or whatever software you use, you cannot actually file it for all years. It's also important to understand that the IRS wants to make sure if you have any other circumstance that explains why the return is amended, you can always attach a statement on the form. You can write a 1 paragraph or 2 paragraphs detailing the circumstances that made you file the amended tax return. The IRS loves that, but please don't write a book. You just got to be very specific, straight to the point. You want to be concise and precise. Okay. So you have this sort of latitude in terms of dealing with the government. And another thing I want to say before I actually move on to the next step, please always sign your amended return. Always sign. Okay. And if you file a joint return, you and your spouse must sign. Very important. Now let's get into the step-by-step. How do you amend a tax return, folks? So the form has 3 columns. So here we have A, B, C, okay? And column A, this is the figure that was reported in the, I want you to look on the screen right now. Look on the screen. So column A, that's the figure that was reported in the original or last amended tax form. And then you have column B, this is the change. And column C, that's actually the new balances, the new amounts, okay? So look on the screen here. So you put your first name. First of all, you put the return for the calendar year. You put your first and last name, your social. And if this is an amended tax return, you do the same thing for your spouse. You put your address. You put your phone number, your city, zip, and state. Moving on here. So here we are putting here, we are married filing jointly, right? You have to check that, very important. And moving on here. One thing I want to say very clearly here is that there are several categories. Here in our case, this is a hypothetical case. We put married filing jointly, but there are some considerations you have to be very careful about. There are some eligibility requirements for married filing separately. So if you are considered married on December 31st of the tax year, then you may choose the married filing separately status for the entire tax year. If the 2 spouses cannot agree to file a joint return, then they'll generally have to use the married filing separately status, okay? And to be considered unmarried for tax purposes, you must meet all of the following criteria. Those are very important. 3 criteria. You lived separately from your spouse from July to December of the tax year. You filed separate tax returns. You paid more than half of the cost of maintaining your home for the tax year. For the first criteria, you lived separately from your spouse from July to December of the tax year. This does not apply for, if you spend time serving in the military, this will not count. Or if you have time spent on a business assignment, medical care, attending school, or serving in the military, again, those 4 categories do not count, okay? And one thing I also want to say here is that there are requirements for folks who are actually filing married, and there are some income amounts requirements. There are some thresholds you need to follow, and this is not the purview of today's show, so I'm not going to cover that, okay? I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about how to file Form 1040 step by step, 1040X. I want you to see right now on the screen here, folks. So we have income and deductions. So the AGI, the adjusted gross income, we put 120. That's the original. The net change 10 grand, and the correct amount is 130,000. Itemized deductions or standard deduction, we put 35,000. So for this particular hypothetical example, we are actually we are atomizing. So our deductions are atomized. Okay. Sorry about that. So here we have, if you do on line 3, you subtract line 2 from line 1, you have the amounts shown on the screen. And we do have a QBI deduction of 3,000. And I'll talk about QBI on this show or another show, depending on the time that I have. And the taxable income here, first we have the original amount, 82,000. The net change, 13,000, and the correct amount is a surplus, an extra 13,000. So that's 95,000. The tax liability here, and we got it from the IRS Tax and Earned Income Credit Tables, and we got basically 9543 for column A, and a 1243 for column C, and the difference we put that in column B, 2860. I want to show you how I found this numbers. Okay, you got to go to something called the IRS Tax Tables, and we put on the screen right now the link, as well as how the form appears. All right, and I want you. This is how we found the tax liability for the original amount, 9,543. If you go to, remember, our taxable income is 82,000, right? So you go to the form you currently have on the screen, where it says if your income is 82,000 but not over a certain amount, and you look there on the third. Do you see that on the third screen? Can you see that? 9543. So this is how we found it. And this is what we did also for the second amount, 95,000. This is how we found 12,403. So you need this table if your goal is to be able to find how much you. Now, if you're using software, the software will do this for you automatically. But if you're doing it manually, or you just want to double check your own data, it's good to use the tables. All right. And these tables are available at the link I just showed you earlier. Moving on here, folks, we are still having a conversation about 1040X, and here, payments. So line 12, federal income tax withheld. We were withheld. We actually paid a 12,543. 500 is the difference, and the amount we owe is 13,043. And line 13, we have nothing to report there. EIC, nothing to report there. And line 15, nothing. Line 16 here, nothing also. And total payments, $13,043. Now here, the refund or amount you owe, here are the overpayments you have to actually, so again, this is the hypothesis here. We have $3,000 of overpayment. This is, and if you subtract line 18 rather, from line 17, you get $10,043. Okay, so if you subtract 3,000 from $13,043, that's the amount you have here, and the amount you owe, the amount we owe in this particular hypothesis. This is an example, of course, fictitious example, but we owe $2,360. Okay, moving on here, in terms of dependents, we have actually put we have 3 dependents. We have children who lived with us, our son and daughter, and we have another nephew. Okay, so you can see that here. I want to quickly talk about the credits that were mentioned on the taxable, the refundable tax credit. Okay, quickly mention that, and we have a few of them. So we have the earned income tax credit. We have the premium tax credit. We have the American Opportunity Tax Credit. We have the additional child tax credit, and we have the health coverage tax credit. So there are several refundable tax credit. And it's really important to understand that a refundable tax credit will pay you a refund if the amount of credit you qualify for is greater than the amount of income tax you actually owed for the year. And so more technically, refundable credits pay a refund if they bring your tax liability below zero. So if your tax liability is minus 5,000, that means you should be expecting a refund check from the IRS of 5,000. Okay, this is something that's kind of cool for a lot of people, and we actually covered some of those refundable tax credits on earlier shows. So if you're interested in the topic, you want to go to there's a video entitled IRS Form 8962 line by line instructions. So we're showing you how to fill out Form 8962 step by step, and we also covered this topic also on another show, and the video is called IRS Schedule 8812. This is additional child tax credit. So how do you fill out this form? Okay, so again, for those who are really interested in those topics, you can go to our channel, and we have a great catalog of videos there. Moving on here, folks, I'm showing you here, we have the dependents for our hypothetical form 1040X. So the dependents, we had our son, our daughter. You also put the nephew. So for each individual, each child, you have to put the social security number, and you have to mention the relationship to you. This is important. The IRS is going to check that, and you want to check the appropriate boxes. Do they qualify for the child tax credit? Do they qualify for the credit for other dependents? You need to mention that. Remember that when we speak about the child tax credit, this is basically a refundable tax credit. Okay, this is very important. And if you want to qualify for the ACTC, this is also a great thing. This is if you took the child tax credit, non-refundable, and your credit amount was greater than your tax liability, you can claim the ACTC in order to get a refund. And this can result in a refund worth up to $1,400 per child. So this is pretty cool. Okay, now part 2, we're not going to really spend too much time on that. But part 3, this is what I was talking to you about earlier. You want to explain changes. You want to explain why you are filing an amended tax return, and the IRS pays attention to that. So in our hypothetical case, we put here our filing status for the tax year changed or was incorrectly entered. The number of dependents claimed was initially inaccurate. We also put that the tax credit and deductions were claimed incorrectly or were not claimed at all. The income reported for the tax year was incorrect. And the deductibility of certain expenses changed as a result of legislation changes. Now, one thing I want to say here is that we use a shortcut here. But if you were to file this with the government, you definitely want to pay attention to the sentence, to the content, right? So you can write really like legit sentences, with a subject verb complement, not have it as a bullet point here. No. So, and one thing also you want to pay attention to is that I think I said it earlier, you need to sign and date the form. And you do this, and you ask your spouse to also do the same thing. So you have to put your occupation, you have to put the date. And if you have paid someone else to prepare the tax return for you, they have to sign at the bottom. So that's the paid preparer. Do you see where it says the paid preparer use only? This is where the CPA or the EA that you hired to do the form must sign, and they must put the PTIN. It's very important. Professional Tax Identification Number. They want to actually put that in, and if they have an EIN at the business level, they also need to indicate that. I want to quickly talk about the explanation because this is important. There are a lot of reasons why people file an amended tax return. And so when the IRS is asking you to explain, to substantiate why you are requesting a new return or you are amending a previously filed return, there is a lot of things you need to do. Please Be clear and concise. I just said it earlier. You don't have to write in bullet points. Write legit sentences. You want to explain things that happen. And some of the explanations could be you want to correct an error or omission to your income, right? So if basically stuff happens in the past and something changed in your life and you feel like you need to tell the IRS, you need to tell the government, that's really good. And you need to do it. You can send an amended tax return to the government. You can also amend a return if your filing status has changed. If you want to change your deductions, right? Let's say you incorrectly claimed certain expenses. To itemize your deductions, or you accidentally included or left out a dependent, you should file an amended return to correct the errors, because this could prevent problems later, like notices or worse, an IRS audit. And you don't want that, right? You can also explain that you are filing the return to claim a credit or correct a credit. And let's say if you have windfalls that you received prior to filing the deadline, to the filing deadline rather. So if you receive windfalls prior to the filing deadline, you can also include that. For example, sole proprietors, S corporation shareholders, or members of a partnership can make pension or profit sharing contributions for 1 year with money they received the following year. So these contributions can be made up to the filing deadline, including extensions. We also have, if there are rules in the regulations, this could also impact your tax filing status. So, if the IRS itself has changed the rules, that's kind of good also. Or if you miscalculated your tax liability. For example, if you are an investor or you are a business owner and you miscalculate your costs in an investment or in a business, this can also be a problem. So you can file a 1040X to correct the error. Or if you have a worthless security also, this could be a great time or a great opportunity to file a return to correct the error. So bottom line is, anytime you have a situation that you're not responsible for originally, and this situation could affect your taxes, it's always a good idea to file an amended tax return. All right, folks, this was it for today's conversation. I was talking to you about Form 1040X instructions, and I defined what the form is, the target audience, the timing, the pros and cons, the step-by-step, the explanation, and now the recap. Thank you so much for your attention. I will see you next time, but until then, remember, stay marvelous.